Welcome to the Let's Talk Property with MFS podcast. MFS are a bridging loan and buy-to-let mortgage provider and not a financial advisors. The opinions expressed in this episode are personal to the host and guest and may not reflect the views of MFS. And welcome to the Let's Talk Property with MFS podcast with me, your host, Mark Hutchings. This is the podcast where we'll talk all things property. And so today, let's talk everything bridging. I am joined here by my guest today, Imogen Williams, who is the Regional Sales Manager at Market Financial Solutions. Imogen is very, very knowledgeable in the property market and in particular the bridging sphere. I am delighted to have her joining me here today. So Imogen, thanks for coming today.
Thanks for having me.
Really appreciate you taking the time out. So you've obviously been involved in the industry for a very long time. So, I mean, how long have you been in the industry and how did you get into it in the first place?
Yeah, so I've been in the industry, nearly 11 years now. Wow. Started out actually as an administration assistant for a mortgage broker, so a small boutique mortgage broker in South London. And then, the manager of the company sort of saw my potential. I went through CMAP, was backed by my company. Once I got on my qualifications, I went on to be a mortgage broker, predominantly in the residential space. I then jumped brokers to SBF, a sort of larger brokerage, and from there on I was working with developers, so large developers. So I was working in sort of foreign national new builds and with high net worth clients, but again more in the residential space. And then I moved into lending. So in the lending space, then started working with predominantly unregulated bridging, some regulated bridging, development finance, second charges, things like that. Okay. And from then I moved to MFS and I've been focusing predominantly in the unregulated bridging space with also our buy-to-let proposition, which we launched this time last year. So that's been my journey. But 11 years in the making. Wow. It's been. It started when I was about 19 years old, so you can do the maths if you want.
So you've obviously seen a lot of changes within the industry and seen bridging lending become a lot more of a popular option for people using to organise finance. So I thought it'd be good today just to sort of touch on the bridging sector and maybe tell people a bit more that not fully familiar with it. So, I mean, quite simply, we could start off with what a bridging loan is and what it could potentially be used for.
Yeah, so they originally started, I believe they originally started sort of, say you had a residential purchase, you hadn't sold your property yet, potentially you're buying a new build, you needed to complete in 28 days, or the purchase that you were looking, the onward purchase for you was particularly urgent, you'd bridge the gap. Yeah. So you put a bridging loan in your existing house, raise the equity for the deposit, and then you had 12 months to sell your property and you moved into the other one. And from that sort of core, it's become now, years later in the industry, it's become now quite nuanced. And essentially what it is a short-term loan. Arranged to be, 12, maybe 18 months, 24 at the very most. Essentially to bridge a gap. But now you see, developers using bridging loans to complete quickly on purchasing sites, whether that be land, commercial property, to get planning for residential. You'll see developers use it to repay their development loans. So they have more time to sell the units. All these sort of host of things. But essentially its main purpose is to be a quick short-term loan to bridge a gap in finance between longer term solutions.
So obviously there's a lot of people that, know about bridging loans slightly, but not sure how the process generally tends to work. So, I mean, if we could just touch on, how a bridging loan works and what the general process is. You can talk about the MFS process and how we do things here, or general process, whichever you prefer, really.
Yeah. So the sort of general process I'll touch on, and then I'll go into the MFS process because I can't really speak for too many other lenders, to be fair. I'm not up to date with their processes. However, the general sort of thing is a client will approach their broker. I think about 80% of our business comes through brokers, if not certainly the majority of it does. Or they'll come direct to a lender if they've got a lender relationship, for example. And then that lender will take a sort of outline information from them and provide them with, so this is where I'm going to go on to the MFS process now. They'll provide them with or we'll provide them with indicative terms. So our SLAs, for example, is 4 working hours. So if you approach us with, these are bang, 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 this is what I want, this is how much I want to borrow, this is the property, this is the scenario, a little bit of flesh around the bone, sorry. And then what we do is we go, okay, look, we think we can do this. 4 working hours we respond with, this is how much it's going to cost, this is what it's going to look like, and this is the bits of information that we need to process this transaction, to get something what we call credit back terms. We can also call a decision in principle. In our case, it's almost, to a certain extent, a mortgage offer subject to legal and vows. So we then take that information. If the client's happy with the rate, they're happy with the fees, we take that information and we go to our credit committee and we agree up front. So our process is specifically designed to basically give the client or the broker as much of a yes as possible, as humanly possible. So we partially underwrite up front. It's to give them as much of an indication as possible, as much of a commitment as we can give without doing a valuation and doing the legal work before they even financially commit. So once we come back with our sort of credit back terms, if the client's happy, they just sign that document. They provide us with any other underwriting requirements that we request. We instruct the valuation, and then we'll instruct the legals when the valuation's back. And then once it's with the solicitors, then it's up for the solicitors to do their due diligence, and we will send the funds when we are told we can send the funds.
Perfect.
Pretty simple. The whole idea is designed around speed and customer service, and some lenders work differently. We tend to be on the more bespoke side. I mean, other lenders have application forms. We don't. We try and keep it as simple as possible.
Yeah.
We think if we can take all this core information from the client, we can transpose it in the most accurate way to create a file. Whereas I think application forms sometimes for clients, they tend to be a bit inaccurate, really.
And it can be a bit daunting for them sometimes when they're just looking for a quote to get an idea of whether they're going to be able to, if it's going to work with the model they're doing, because sometimes you can provide an unbelievable amount of paperwork for some lenders. You can then pay for a valuation, then you're waiting for them to turn around and say, actually, we don't like the asset or we don't like the property.
And they might not go to the credit committee till the back end. So not every bridging lender is the same. I will say that. Our process... I would say this, but our process is particularly good, and we try and make it as sleek as possible, which is, at the end of the day, what bridging was sort of designed around, as being a really quick process. But it doesn't always happen, I'm going to be honest. No. Not industry-wide.
Well, especially in today's market as well. There's a lot more window shoppers than I'd normally see, but I suppose it's currently the market we're in. But, I mean... what sort of assets do people normally use to bridge with? Because obviously there's a wide variety from commercial to semi-commercial to residential to office blocks to, there's a whole wide world of stuff that we can bridge on.
So you mentioned quite a few good ones there. Commercial property, for example, the types of commercial property we could lend on could go anywhere from a warehouse to a factory, so industrial, to a large hotel or shopping centre, to a small pub, a semi-commercial with a shop underneath. Again, a vacant office block where a developer's looking to purchase to get planning, or if they've already got planning to build to resi. We don't do this, but other lenders you'll traditionally get a bridge for a land acquisition. With or without planning will depend on the difficulty of how that is, but there's a whole host of different assets, and if you can name it, if it's property or land, you can there's probably someone that will do a bridge on it. For example, even sort of nursing and care homes, which traditionally have been pretty hard to secure against just because of reputational risk. And sometimes it's not even about the asset, it's about the client. There's all, traditionally it was, you take a bridging loan because, the XYZ because of the asset. But more and more these days, we're finding bridging loans are facilitating foreign nationals, people with adverse credit, a whole host of quirky clientele, quirky asset, quirky client. That's the sort of go-to for bridging now, as well as just, I need this asset and I need to get it quickly. It can be, this is my circumstance. I need to either establish myself a credit file or whatever it might be in the UK, and then I can and then I maybe commercial, you need to have a certain amount of accounts to do commercial terms, certain amount of years. take a bridging loan, build up 12 months accounts, and then you can go on a longer term facility, that kind of thing. So yeah.
Are you seeing sort of more people using, quite a few people I'm speaking to are using bridging as a way to purchase a buy-to-let, to wait for the market to see rates hopefully come down before they refinance it onto a term mortgage? Because obviously buy-to-let rates across the market, there's quite a broad spectrum of it. So are you seeing a lot more of that?
Yeah, and I'm seeing a lot more actually. The single buy-to-let, no, but buy-to-let property portfolios, yes. A lot of people restructuring their portfolios using bridging, taking a 12, 18, 21-month bridging term with us in order to restructure. Potentially they're going to sell some off, potentially some are commercial as well. Completely restructure, take out a bit of money potentially to put towards, because there are opportunities in this market.
Yeah,
people with equity to utilise are wanting to utilise the equity to take these key opportunities in the market. So yeah, seeing a lot of buy-to-let portfolio restructuring in the market at the moment, with a view to either refinance the portfolio once the rate situation in this country is stabilised, or potentially they're thinking, well, I could sell a few of these assets off, I could buy X, Y, Z. People just rethinking
a lot of people revisiting their
ideas.
Portfolios, aren't they? Where obviously we do quite a large amount of buy-to-let here at MFS, and again, there's a lot of people there in the market that have these large portfolios, which ironically it's a lot more difficult. The more properties you get, the more difficult it gets. Where a mainstream lender, if you've got more than 3 or 4 properties, they don't really want to know you.
No.
So obviously specialist lending plays a big part in all of that. Are you seeing more portfolio landlords accepting sort of the higher rates within the market just to secure it for now, or people still sort of?
It's a bit of a mixed bag, to be honest. Some are motivated to do so. I think a lot are considering sale at the moment. I know from our perspective, we don't stress test background portfolios, but what these buy-to-let landlords are finding is if they go to any of the sort of more mainstream lenders where they're looking to purchase or refinance one of their properties and they've got a big portfolio in the background, because of the rate situation at the moment, they stress test that. They stress test that background portfolio to the death. So they're really struggling to get any sort of meaningful leverage against their assets, when they've got a big portfolio in the background. So I think they are first and foremost turning to bridging. And then if they are looking for a longer term option, they're motivated to take something, at just a higher rate 2-year fix, they will. But I think 5-year fixes are completely off the table. So they're looking more towards the shorter term options, whether that be a shorter term product or a bridge until things stabilise.
Well,
we hope.
Yeah, fingers crossed. I suppose another reason why a lot of people are using bridging as opposed to locking themselves into a sort of buy-to-let rate is the exit fees. Obviously, we don't charge any, MFS don't charge any exit fees. So, a lot of people don't want to commit to a 2, 3, 5-year term to then be told 6, 12 months later that rates are dropping, and then obviously, some ERCs could be 3-4% maybe, depending on how soon you come in. So you see a lot of people using bridging specifically for that reason.
Yeah, it's completely flexible, isn't it?
Yeah.
So, for us, first 3 months interest will always retain. There's no ERCs after that. Most other lenders have a similar proposition where they need first month's interest, first 3 months interest. It essentially means you're basically working on a product that's ERC free. And with some of the specialist lending buy-to-let rates out there at the moment, they're actually not too different from bridging rates, even though bridging is traditionally more expensive.
Just got higher product fees at the minute.
Just higher product fees. So it really depends on the particular client's motivation, really.
And how keen they are to get moving. I suppose that could sort of bring us nicely onto the sort of next question I want to sort of touch base on is, obviously there's certain loan to values on certain assets. So, generally what the bridge lenders loan to value wise, how much money effectively would you need to put in normally?
Yeah, I think traditionally the max is 75 on residential. I think maximum, in some instances, you might be able to get 75 on a semi-commercial. And then on commercial, I think the maximum industry-wide is about 70 at the moment. Well, we're at 70, and I think that's fairly top of the market, whereas a lot more lenders are sort of capping at 60, 65%. So you need to be coming into bridging with either a significant amount of equity or deposit. And again, that touches on what I was saying about mitigating risk for the lender in terms of, our lending is risk-based, is mainly secure, it's on the asset, although we might take PGs or might have a debenture on the company or whatever. These are all ways to mitigate risk outside of the security itself. The main proportion of risk for bridging lenders is on that particular security. So you're not necessarily going to be getting the 95%. Some lenders might offer more, but it's going to be on lower loans. Traditionally, the only time you might see a higher loan to value is when you've got an undervalue purchase, so below market value purchase, where, we'll do 85% of the purchase price. Other lenders will cap at 70% of the value or 90% of the. There's a few different scenarios you can get from other lenders. So that's the only other time if the property's worth more and you're buying it for less, you might be able to get more. But traditionally, 75% is the max. You're going to be coming, and that's gross as well. So, or if you've got interest rolled up on a bridge, you're going to be needing to come in with 25% at least, or 30%. To sort of mitigate that interest and how much that's going to be coming off your loan.
And I suppose obviously some people will use sort of a 100% funding with using other assets to then get them the result where you can do a charge on the asset that they're purchasing and then do a second charge or release some equity from another property to make up the difference. Do a lot of people still do that method?
Yeah, people do, but I think we've seen a little bit less of it recently, just because I think a lot of people are quite highly geared at the moment. We offer second charge bridging as well, sort of up to 70%. So you can take a second charge here, second charge there, top up your deposit. It is something that bridging lenders are more than happy to do. We like to do it. Multiple securities are good. I'm happy to, if it makes the scenario more viable for the client and the application more likely to proceed, that's great. But what we are seeing is portfolios potentially a little bit more higher geared than they have traditionally been at the moment. Why that is probably because the higher rates and refinancing, and that's cut away. Potentially there's been, there's still been growth in the property market, but less than previous years, although it doesn't seem really that noticeable. But I think for these sort of mixture of reasons, people that I'm seeing at the moment have been slightly more higher geared, so it's made that a little bit less feasible, but certainly still an option for anyone in the market that has equity across other properties and they want to utilize that. You can certainly do one loan over multiple properties. I
suppose you find sometimes the people can be a bit not hesitant, but they're sort of, because obviously you're always thinking if you're exit, aren't you, on the bridge, and then some people are sitting there looking at the current rates for exit, and there's a lot more decisions need to be made than normally, because you've got a general view of what the whole market does previously, but now it's sort of, you've got some lenders which are obviously lower rates than other lenders, but then their criteria is slightly different. So it's it still can be a bit of a minefield for people. And do you think it's handy for people having companies like MFS with BDMs and brokers that can help and explain the situations to the clients, can tell them about the current market, what they're seeing? Do you think that helps these clients in making their decisions?
I think sales, I think BDMs, business development executives at office-based BDMs, brokers are all really valuable tools for clients looking to come into the bridging world. These people are going to be able to guide you. In our case, we help structure. We want to do, we want to write business. We're not looking to say no to things. That's because we look at things a little bit more differently to other lenders have different business models where, they'll be turning away business because X, Y, Z. Our business model is to look at a deal and say, how can we do this, rather than why can't we not do it? And so these people are going to help you to structure, and it's not just us, it's our underwriters as well, which we train to do that. So how can we do this? Again, you mentioned taking multiple security. Okay, so we're a little bit short on what you needed to borrow. Do you have any other assets in the background? Questions like this, looking at a client's, taking a client's A&L, saying, okay, maybe we can structure something slightly differently because you're a good client with a good track record. All of these things, these people are going to help you probably get a better deal at the end of the day as well. And if you're really struggling to actually get what you want done in this market, those are people that are going to help you to the best of their abilities that they can. Not everything is possible in finance, unfortunately, but if you speak to brokers, BDMs, they will help you get the most feasible option for you in the market.
Yeah, perfect. Well, I mean, there's a lot of talk in the current market about rates.
Yes.
I know it's a big subject on multiple things, and obviously I think a lot of things that sort of initially put people off bridging is, you know, the rates can, if you've not used bridging before, it can be a bit of a scary thing to get into. So I mean, if we could touch base just a little bit on rates and sort of general consensus on what you think is going to be happening over the next few 6 months maybe.
Yeah, I mean, I think we did a lot of projections, and there's been a lot of projections in the market about it's going to stabilise at this, it's going to stabilise at this. Actual cost of funds based on SONIA, I think in general it has come down, although I think it went up a little bit and then it's come down again. So what's going to happen with rates? I think in general, you know, we'll probably see them come down at some point just as everyone stabilises, but I don't think the new normal is, it's not going to be back at your 1%, so 1.5%.
I can never see that happening again.
So I think everyone needs to adjust themselves rather than waiting for the banks to adjust massively, or lenders.
Well, nothing moves fast, does it? And you know, I think we've had a lot of people second guessing the market. I've got people that were just before Christmas saying, oh, you know, we're going to wait, see if the rates come down. They're now coming back saying, look, I can't see anything changing. Can we just sort of move ahead? And I suppose that probably brings me quite nicely onto the sort of next part of sort of bridging trends, what you're currently seeing in the market trend-wise. What sort of stuff are people looking at? What sort of...
I've seen quite a lot of development exit recently. That might just be because a few builds have, you know, might be to do with tying into the pandemic, and the people have managed to finish their builds, and then they need to obviously take out their development funding, things like that. I feel like there's been quite a few development exit cases in the market recently.
Would you say that's from, obviously, the developers? They've built the property, a lot of them selling off plans. They would have taken deposits, some of them 2-3 years ago, not knowing what the current marketing condition to be. So obviously the people that are paying the deposits may be struggling to organise the purchase to buy the property. Would you say it's a big cause of this, or the reason why we're seeing a lot more developer exit than normal?
I think so. And I think there was a big sort of cost of materials increase, and I think that maybe slowed down production. I think there's got to be a trickle-down effect of why there's quite a lot of developments all just being finished now. It could just be a coincidence, who knows? But just my general sort of theory is that probably this is when the developers have managed to get their builds complete due to cost of funds or things like that. Cost of materials, sorry.
It's even getting materials as well, because a lot of developers are having delays. I know I'm looking at a deal for a client now. It's supposed to complete the development's supposed to complete middle of last year. And we've only just been able to get in the start of this year to value it because they've been so behind at the moment. So, and again, I think as well, there's not many products out there. Well, there used to be a few products, but there's not as many products out there now for people that are buying properties that aren't completed yet. And the fact that they're so delayed, all these properties are delayed, and a mortgage offer only lasts for so long. So you can't give a mortgage offer to then wait for it to be delayed by another 3 months, or so on and so forth. But I think, you know, it's interesting.
I think as well, again, I mentioned the portfolio refinancing. That is really what we are seeing a lot of at the moment. We've touched on that already. And foreign national investment in the UK. So foreign nationals, I mean, they often use, high net worth foreign nationals often use private banks to secure funding, but that takes a long time to complete a private banking app. So what we often do is arrange bridging for people. So, you know, foreign nationals from all over the world to purchase traditionally London security, but it is all over the UK, but the majority of it is purchasing in London, as you would expect. And they then exit with their private banking finance once it's done. So again, foreign investment in the market is still quite strong. I
mean, how do you expect the bridging market to fare in the next year, maybe a couple of years? You see it, well, I see it going from strength to strength. I don't know about yourself. There are more lenders coming into the market. There's more people using it, more specialist applications than previous years. Do you see that trend continuing?
Yeah, I think whenever there's trouble in the market, bridging always does really well. Whenever you've got a little bit of a, I'd like to put it politely, complex market, you always see bridging do really well, because it will do the things that others won't.
Yeah.
When banks are restricting or appetite's restricting in the general market, bridging will do well because it picks up the space that others won't do, and it'll do it quickly. For example, there's quite low stock, like residential stock in the market currently. And bridging you complete very quickly, so it's a good utilization. It's a good tool to utilize to complete something quickly, because you need to complete quickly.
Yeah.
Because there's 5 other people that want to buy the house that you're buying, and if you don't get that done quickly, you're going to get gazumped.
Yeah.
Because I've seen a lot of people getting gazumped at the moment. So I think it's going to do really well. I've seen that I think it was applications in bridging are up by over 9%, which is, you said, from strength to strength, because there is an uptake. There is a big uptake in bridging, and I think people are coming to terms with this is where pricing is now, and it's a means to an end, which has always been. So I don't see anything changing really for bridging. I can see it continuing.
Yeah, my views look the exact same. I think the reason why you're probably seeing less completions because there's more people competing for properties, and not necessarily everyone needs bridging. There's still a lot of, 30% of the properties bought in this country are bought still with cash. So you've still got a lot of that. I mean, MFS, we do a lot of education about bridging with brokers all across the market. I mean, what sort of tips would you give new brokers coming into this industry? Because we're seeing a lot of people that normally focus strictly on regulated business and now seeing the benefits, not only for their clients, but obviously, being able to process more deals where they normally say no, because they only get 1 or 2 maybe a year. They're now seeing that on a monthly basis. So what sort of tips do you give people?
I would 100% say learn as much as you can about the more specialist areas of the market. If you're coming into the bridging space, learn about development, learn about commercial term, all of these areas, because these are the areas of the market that when normal residential struggles, these areas continue, because developers, if you are a good, knowledgeable broker that can service good developers in the market, developers are still looking for opportunities. Developers still have working capital when potentially the rest of the economy is in recession. They still have banks of land, or they're still they need to continue, to output.
It still carries on.
It still carries on. Yeah, if you've got, buy-to-let, portfolio landlords or commercial, things like that, your clients are less, no one is, immune to, whether how the economy's going, but these people, these types of deals are less so than just your standard residential sales and purchases. So that's what I would say, and just learn as much as you can. I think there's a lot of brokers in the market at the moment, but what there is now is coming through is some new qualifications for specialist finance brokers, and I would say bite their hand off, because there's so much to learn, and there's so many other factors that you won't even be thinking of just after just doing, for example, your CMAP. So I would say absolutely bite their hand off.
Yeah, because they don't really talk about bridging apart from broken chains within a CMAP, not as an actual tool to invest and bridge it, not bridge a gap.
So I'd say absolutely go for it, but dive headfirst into the specialist market. It will do you well.
Yeah, I mean, we put a lot of stuff on our website, don't we? Like market reports, which people can access, which covers anything from gazumping, as we were talking about, to portfolio landlords,
auction purchases, all of that. So you can find, I mean, for example, on our website we've got case studies for deals that we've done, which I think are a really good learning tool. And we've got impartial sort of industry stats that we publish on a regular basis. So as well as other educational courses that you can take, which actually we have collaborated with as well.
Yeah, there's some interesting ones coming up actually, isn't there?
Yeah, you can also, and listening to things like this as well. is also one.
Yeah, well, to be fair,
Yeah.
I get a huge amount of knowledge from listening to podcasts and, just generally keeping up date with the market, because obviously you always need to have your finger on the pulse, especially you need to be 2 steps ahead of, well, as best you can within this market to obviously service your client better. So, I mean, what would you say is the most important lesson, right, that you've learned within your career so far?
So I'm gonna speak to this from a women in finance point of view.
Yeah, amazing.
Because I think that's what resonates with me the most. So I would say the most important lesson that I've learned in my career so far is to seek out other women, seek out women role models.
Yeah.
And seek out women collaborators in the industry with you, because they will be your biggest support. They will have the best advice for you.
Yeah.
And while you may feel, because I have felt like this, that you may feel that you're pitted against each other, actually, if you surround yourself with other women in the industry, you will realize that they'll be your biggest support. They will have the best advice for you. And actually, the women in this industry who I'm connected with a lot of with at the moment, they're amazing, and they champion other women, and there's room for everyone. And that would be my biggest advice to any woman coming into the industry, is seek out your other females, and they will help you.
Yeah, because this is always, I know this is always seen as a very male-orientated business, but like you said, there are loads and loads and loads of very talented ladies which are taking this market by storm.
Absolutely.
Something that I love and I love seeing. So.
And you're seeing them more and more in more senior roles as well.
Well, you're my boss.
Yeah. Exactly. Like, you've got Tanya Amaz at Together, head of sales, things like that, which is something that like 5 or 10 years ago you really didn't see.
No.
So change is happening. There's more work to be done.
Yeah.
But change is happening, so it's good.
And that's what we like to see. And obviously MFS are one of the big driving forces behind it, because it's something that we support. There's a lot of
diversity. We run events. Huge amount of diversity in MFS. So we do champion women leaders and diversity of all types. So
Right, we're coming to the end now. So just finally, I'd like to say thank you very much for coming today. It's been an absolute pleasure having you here. And then also, could you just let listeners know whereabouts they can find you, really?
Yeah, MFS website, just Google us, it's right there. LinkedIn as well, I'm always online. So those are the best places to find us. I'd recommend following myself and MFS, as we both do quite a lot of posts on LinkedIn. So yeah, that's where I'm at.
Fantastic stuff. Well, look, thanks again for coming today. I appreciate you taking time out, because I know you're always very, very busy. So really appreciate that. I'd just like to say to everyone today, thank you for tuning in and listening to the Let's Talk Property with MFS podcast. Please don't forget to comment and subscribe so you don't make sure you don't miss out on any future episodes. If you want to find out more information about Market Financial Solutions and what we do here, please head to www.mfsuk.com. Bye for now, and we'll see you again soon.
Bye.